So far, half or so of the S&P 500 companies have reported earnings, and the bulk of them have beaten earnings expectations. Earnings are up year over year. So what about this slowdown in the economy that the Fed is supposed to be engineering? Our guest warns we could see choppy trading this week with more big tech earnings on tap. We've got Amazon tomorrow. We got Apple on Thursday. We've got Wednesday's Fed meeting. And we have the U.S. jobs number for April on Friday. We're joined by David Dietze, Managing Principal and Senior Investment Strategist at Peapack Private Wealth Management. David, great to see you. Thanks for joining us.
Andy, a pleasure to be with you.
Has a theme emerged for you from this earnings season?
Yeah, I think you captured it right. Earnings on average are up about 6.5% year over year, which is better than expected. But the margin of beats is surprisingly strong relative to history. And so I think that the next few quarters, analysts are also looking for earnings to be up year over year. So I think their earnings outlook looks good. I think the question is super high valuations in the large cap companies, and of course concerns over inflation, which funnels into interest rates and therefore the Fed.
Get into Tesla, if you would. Is this false optimism? People seem very pleased that Elon Musk has struck a deal with the Chinese to let them approve his autonomous or semi-autonomous driving.
Elon Musk continues to pull rabbits out of his hat. I mean, to be able to go to China, get a meeting with one of the key leaders in the government, get those regulatory approvals for the self-driving technology, and at the same time partner up with one of the internet giants over there, Baidu, is nothing short of remarkable. Remember, ultimately, China could be the largest market ever for EV cars. And so he's followed up a reversal on Wall Street by agreeing to speed up the introduction of cheaper Tesla models with this big win over China. Is pretty good. The problem from my perspective is you're still trading at 49 times earnings. And of course, when you start to cheapen your car models, in my view, historically, that means margins get smaller, profitability lessens, and now you're starting to look like you want to compete with the Chevy Volt. Well, I can buy GM at 10 times earnings, or I can buy Tesla at 49. I want to see those premium, super expensive products. Ultimately, what Wall Street wants to see, of course, is the self-driving. The problem is Wall Street is an impatient place. It wants profits now. That could be 5 to even 10 years off.
You know, that's interesting. When you think about Apple and their incredible success, they don't cut prices. They make people pay a premium for their products.
Yeah, absolutely. So, I mean, Apple's, of course, up in the news today that it may have a partnership with OpenAI. They certainly need an AI tailwind to get their stock price going, get their business growing again. You know, the problem with Apple, as far as I'm concerned, is it's a hardware company, and you don't buy hardware, you know, every month the way you're paying for software, for example. The other big problem, of course, China, and of course they're getting priced out of the market in China. Again, that's almost 20% of their business, so that bears watching as well.
It's kind of interesting, isn't it? Both Tesla and Apple facing competition, finally, from low-cost rivals.
You know, that's the nature of capitalism, Andy. I mean, you know, when you become the biggest in the land, when you become the richest, the most profitable, you've got a target on your back by every entrepreneur, every company around the world, and they're going to keep chipping away at you with lower prices, better technology. You're the team to beat, and it's catching up with them a little bit.
What about Amazon? We're looking at a scorecard over the past year. Well, Meta has certainly rock and rolled, but it did disappoint in its latest quarter, I know, with the big capex. Tesla and Apple have been really also rans over the past year by that measure. But talk to us about Amazon. We're expecting their numbers tomorrow. Is that a stock people can just buy and forget about?
Well, as we've seen from Tesla and Apple, you can't just buy anything and forget about it. So we like Amazon here. I think the key issue investors are going to be looking for tomorrow is, do they initiate a dividend? We saw a couple quarters ago Meta issuing their first dividend, very well received. And of course, Alphabet stock was up, what, 10 to 12% on Friday, because one of the reasons was they initiated a dividend. A dividend opens up your stock to a whole other category of investors who demand to see some return of money to shareholders. Of course, all eyes will be on their cloud business. To what extent are AI offerings incorporated into that cloud business really driving it? We've seen great numbers coming out of, for example, Alphabet and Microsoft in terms of growth in their cloud business. I'm afraid that Amazon's lagging a little bit, so that's going to be a bit of a show me. The other thing that's kind of coming out of nowhere is the growth in Amazon's digital advertising. That's a very high margin business, much higher margin than selling books on a website. And that's been growing leaps and bounds. Of course, they've got tough competition there with, of course, Meta, who, of course, the Google search and so forth, YouTube. But that is a growth engine for Amazon that we're going to be watching for very carefully.
What about copper? Are you excited about copper, David? BHP, obviously, with that massive, worth almost $40 billion takeover approach for Anglo American. And we've seen copper stocks rising again today.
Yeah, so I am excited about copper. Of course, it's at a 2-year high. So it's already moved pretty well. But what I like about copper, of course, is it's such a key, essential element for so much of the greening of the globe, whether you're talking EVs, whether you're talking other ways to generate renewable resources. Copper is a critical element. There's been no investments in copper, of course, for that matter, most basic materials areas and companies for decades now, because the margins have been so thin. It's been a poor performer. And so now we're seeing the copper price start to move. I do like BHP because, of course, it's not just copper. They're big holdings in iron, lots of other compounds too. They're trading about 12.5 times earnings. There's about 21 the S&P 500. Well, people think it's another basic materials laggard. Well, you're right. This year is down about 18% versus almost 10 on the S&P. But if you look back since the turn of the century, it's up 5-fold. It's beaten the pants off the S&P 500. This is a very focused company based in London. ADRs are available in the United States. And of course, now they're launching a takeover on another peer that's been in a poor performer, Anglo American. If they can consolidate that too, that's going to give them another growth catalyst. So in addition, you've got a very healthy dividend at BHP. It's not as sexy as some of the Mag 7 stocks we've been talking about, but it could make investors good money and be a nice hedge on inflation.